This video shows how to calculate the total income tax, pay the additional taxes due or claim for refund, and file the income tax returns on the government tax portal. First, register yourself on the income tax portal by using the Aadhaar, PAN, and the OTP that will be provided. Then go to the Download section, IT Return Preparation Software tab, and download the relevant ITR form. ITR1 is sufficient for people with income from salary, one house property, other sources like interest income and agricultural income of less than 5,000. The total income should not exceed 50 lakhs. ITR2 to be used if income exceeds 50 lakhs or if the income includes capital gains like investment in house property and capital gain made out of it, or for gains made out of equity or debt or mutual funds. Fill up all the required worksheets inside the ITR Excel downloaded, as is explained in the next section on how to fill up the ITR sheet. After all sheets are filled and the tax due is paid as self-assessment tax, use the Generate XML option inside the ITR sheet to generate the XML file. Then go to the income tax website, to the e-file section, income tax return, and upload the generated XML file. Use the Aadhaar OTP option to verify the IT returns instantaneously. How to fill up ITR2? In Part A General, enter the personal details like PAN, Aadhaar, address, email, phone number, residential status, and so on. In the salary worksheet, use the Form 16 from the employer. Enter the gross salary details, exemptions under Section 10 including the HRA, deductions under Section 16. In the house property worksheet, enter the property address, tenant name and PAN number, total rent collected for the year, property tax paid. If the house is let out for rent, income from house property is the gross rent received minus property tax paid minus 30% of gross property rent minus property tax. You can subtract another 2 lakhs if the house is taken on loan and the interest paid is 2 lakhs or higher. If the house is self-occupied, you can subtract 2 lakhs and make it as a loss if the home is taken on loan and interest paid is 2 lakhs or higher. To calculate the capital gains, first have the tax statement ready from all the demat accounts of your equity and debt funds. Also have the quarter-wise profit and loss amounts based on the trade statements. Short-term capital gain on equity or equity-oriented mutual funds. Go to section A21A and enter the total sale value realized. Go to section A21B and enter the total purchase value including the purchase price, brokerage, annual fee and other charges. The difference of the two gives the short-term capital gain on equity. In section F1, enter the same short-term capital gain quarter-wise. This is taxable at the rate 15%. Short-term capital gain or debt mutual funds. Go to section A5, A1A and enter the total sale value realized. Then go to section A5, B1 and enter the purchase value including the brokerage and other costs. The difference gives the short-term capital gain on debt instrument. In section F3, enter the same short-term capital gain made quarter-wise. These gains are taxable at applicable rates. Long-term capital gain on equity or equity-oriented mutual funds. To get this value, enter the share-wise or unit-wise details in the worksheet Schedule 112A. Once this is done, the long-term capital gain worksheet section B4 gets auto-populated. Long-term capital gain on debt or debt-oriented mutual funds. In section B9, 1A, enter the total sale value realized. In section A9B1, enter the purchase value calculated with indexation. In section F6, the long-term capital gain on debt to be entered quarter-wise. This is taxable at the rate of 20% with indexation. Then there is the worksheet CFL for carry forward losses. Losses carried forward from the previous years and to be carried forward from the current year have to be entered here. Loss could be due to house property, short-term capital loss, or long-term capital loss. The appropriate loss amount, assessment year, and the date of filing of return has to be entered for the previous years. The current year losses get auto-populated from the capital gain worksheet number 11. Click on the Compute Set-Off button for adjusting the previous year's losses against current year profits. If the current year losses are greater than the current year profit after adjustment, the rest will be carried forward to future years in number XII. Next, we go to worksheet OS, which means other sources of income like bank interest. In section 1BI, the interest from sources like bank SB, FD, post office, NSC, etc. can be entered, and these are taxable at applicable rates. Next is section 80D. In this worksheet, the total medical insurance premium spent and the preventive health checkup spent for self or dependents or parents can be entered. Next we go to the worksheet 6A. Here the total payments made towards LIC premium, PPF, PF and home loan principal can be entered under section 80C. Payment made towards pension fund NPS can be entered in B under section 80CCC. In G, expenses towards maintenance and treatments of serious illnesses of dependent persons can be entered. This is under section 80DD. In H, expenses towards treatment of serious illness of dependent persons can be entered. This is section 80DDB. I is for loan on higher education under section 80E. J is for interest on loan taken for residential low-cost housing under section 80E. K is additional interest exemption for low-cost housing. L is for deduction due to electric vehicle purchase under section 80EEB. M, O, P are for different types of donations paid. N is for rent paid. This cannot be used if the HRA has been claimed in the salary. S is for interest on SP account of senior citizens. U is for deduction for person with disability. Next we go to the worksheet Schedule AL. This is to declare the assets and liabilities of the taxpayer and is to be used only if the total taxable income exceeds 50 lakh rupees in the year. Next is the worksheet TDS. In section TDS 120B, enter the TDS by employers as given in Form 16. In section TDS 222C1, enter the TDS by banks and other deposits as per Form 16A. Next is the verification worksheet. Here enter all the personal details. Then go to the worksheet Part B TITTI. Click on the Calculate Tax button. Verify the total income calculated from other worksheets by checking the Part B TI. Then verify the tax liability on the total income by checking the Part B TTI section and check the amount payable value indicated. If the amount payable is greater than 0, pay the self-assessment tax and fill in the details of tax paid in the worksheet IT. After that, click on the Calculate Tax button again in Part B TITTI sheet. Now the amount payable should be 0. So that is how the income is calculated, the total tax is calculated, additional tax is paid or claimed for refund, and the return is filed. I hope the video was useful for you. Thank you. Below is a brief description of the HRA exemption formula under Section 10. Tax implication on home loan. Tax implication on different types of capital gains. And a note on how to pay self-assessment tax. Thanks for watching the video and wish you a great day.